Assalamualaikum warahmatullahi ta'ala wabarakatuh. First of all, let's get to know our group member first. First is me, Muhammad Haikal bin Uzaimin. Second one is Muhammad Muazzam bin Muhammad Haris. The third one is Muhammad Amsyah bin Muhammad Apendi. And the last one is Ahmad Hishamuddin bin Ahmad Fauzi. Let's continue with the history of company for Alliance Bank. The Alliance Banking Group established on 19 January 2001 with the successful merger of 7 financial institutions. The newly merged entity name and logo were unveiled to the public the first time as the Alliance Banking Group, comprising Alliance Bank Malaysia Berhad, Alliance Finance Berhad, Alliance Merchant Bank Berhad, and Alliance Unit Trust Management Berhad. Next, it also provides easy access to its broad base of customers throughout the country via multiple delivery channels, which include retail branch, privileged banking centers, business centers, investment bank branches, and direct marketing office located nationwide, as well as mobile and internet banking. The vision for Alliance Berhad is building alliance to improve life. As well, the mission is to build consistent and sustainable financial performance, to deliver superior customer experience, to develop engaged employees with the right value.
Thanks, Haikal. Now, I will continue the next part, which is factor to consider when having a segment reporting. First is nature of business activities. Business activities are activities a business engaged in for profit-making purposes, such as operations, investment, and financing activities. Alliance Bank is a finance-related business that carries out several business activities such as consumer banking, business banking, financial market, and investment banking. An entity may generate reports that present its business activity in a number of ways. If the Chief Operating Decision Maker, CODM, use more than one set of segment information, other factors such as the nature of each component's business activities, existence of managers responsible for them, and information presented to the Board of Directors may identify a single set of components as constituting an entity's operating segments. Second is existence of managers responsible for the activities. Operating segments are reported in a manner consistent with the internal reporting provided to the Chief Operating Decision Maker. The Chief Operating Decision Maker, who is responsible for allocating resources and assessing performance of the operating segments. The management committee of the group is identified as the Chief Operating Decision Maker. An operating segment has a segment manager who reports directly to the CODM and maintains regular contact with him or her to discuss operating activities such as financial results, forecasts, or plans for the segment. Third is information presented to the Board of Directors, BOD. The information presented to the BOD contains reliable information about the company's overall performance and financial position. It helps evaluate the company's performance so that decisions about allocating resources and profit maximization can be made wisely. The criteria might apply to all more overlapping groups of components for which managers who are held accountable. This arrangement is also known as magnetic form of organization. For example, in certain corporations, some managers change the various product and service line globally, while others are changed in specific geographic areas. The principal operating decision maker analyzes the operating performance of both set of components and in a regular basis, and financial data assessment for both. Next is business segment. Alliance Bank has 4 business segments, which are consumer banking, business banking, financial markets, and investment banking. First is consumer banking, which offers saving accounts, checking accounts, debit and credit cards to assist individuals in managing their finance. Second is business banking. This type of financial service offers business loan, checking accounts and saving accounts, merchant service, treasury services. Third is financial markets. It provides buyers and sellers the means to trade financial instruments including bonds, equities, the various international currencies and derivation. Fourth is investment banking. This includes underwriting new debt and equity securities for all types of corporation, adding the sale of securities and helping to facilitate measures and brokers trader for both institution and private investors. The next part is Chief of Decision Making, CODM, and its responsibility. Chief of Decision Making or CODM is the individual or a group of individuals that is responsible for the allocation of resources and assessing the performance of the entity's business unit. CODM of Alliance Bank is the board of directors and the senior management. Alliance Bank has Joel Conrich as the Group Chief of Executive Officer, CEO, as well as the Chairman of the company, Tan Sri Dato' Ahmad bin Muhammad Don, as President and Chief Operating Officer, COO, and the other board directors as the Chief of Decision Making. Next is the responsibilities of CODM. The first one is regularly reviews the operating results of both set of components and financial information. In that situation, the entity shall determine which set of components constitute the operating segments by reference to the core principle. Next is assess the performance of what various segments. In practice, particular challenge in establishing operational segments is the extent to which business unit operating data are collected for assessment by the CODM. The CODM will receive and examine information regarding the operating results of individual business units as well as groupings of business units, and this set of data will use by CODM to make choices and evaluate performance. Furthermore, the responsibilities of CODM relies primarily on the net interest revenue, assess the performance of the segment and decision about resources to be allocated to the segment. In addition, CODM is responsible to make decisions on the allocation of resources based on the performance to ensure the company obtains more profit.
Let's move on to the process to identify reportable and non-reportable segment. This consists of 10% threshold test and 75% of total revenue requirement. Under the 10% threshold test, there are three. The first one is a revenue basis, which is total reported external and internal revenue over total revenue of all operating segments. Allied banks will be using this one. The second one is profit or loss, amount of segment reported profit or loss to the total amount of profit or loss of all segment. The third one is asset basis. Asset basis is total asset of operating segment compared to the total asset of all segments. As for the 75% total revenue requirement, 75% test is calculated by dividing total external revenues for reportable segments by total external revenue for all operating segments. Next is operating segment. Alliance banks consist of 5 operating segments. The first one is consumer banking, business banking, stockbroking, and corporate advisory. And the last one is others. As for the threshold 10% threshold test, the three of operating segments satisfy this test. You can see that the first consumer banking surpassed 10% threshold test by 33.19%. As for the business banking, 46.91%, financial market 19.53%, but the stockbroking and cooperative advisory and others didn't surpass the 10% threshold test with 0.38% and 0.01%. This because deal with cost, the segment will be reported. The 1, 2, and 3 which is consumer banking, business banking, financial banking, will be considered as reportable segment, but the stockbroking and corporate advisory and others will be considered as non-reportable segment under the 10% threshold test. After that, the 75% threshold test. We will be taking the 3 reportable segment, which is consumer banking, business banking, and financial market. We will be taking the external revenue for all of them and added together to get the total of external revenue. And the formula is external revenue of reportable segment will be divided by total external revenue and time with 100. As for the calculation, which is 1,011,587 divided by 1,080,847 and times with 100, we will get the result as 99.29 cents. The result is the total external revenue attributable to the reportable segment of Alliance Banks is exceeding 75% of external revenue. Therefore, no additional segment. As for the final calculation part for the segmental report, we will be adding a new segmental report. But because the segmental report already surpassing the 75% threshold test, we will only be combining the 2 non-reportable segment and added them as one together and make a new segmental report, which is others. Consists of stockbroking and corporate advisory, distribution channel, trustee services, and head office. We'll be adding the external revenue, internal revenue, and we got the total revenue. As we can see, there's also consists of net income, other operating expenses, depreciation, and amortization. And all of that will be according to the and will be calculated for the new segmental report.
So, to conclude the segment reporting, there are advantages and disadvantages of segment reporting to the respective company. The first advantage of segment reporting is it helps in investment and credit decisions. For a company that operates in a few segments like Alliance Bank, segment reporting provides information to investors and creditors regarding the financial results and position of the most important operating units of a company, which they can use as the basis for decision related to the company. Another advantage is gaining an overview of the company's performance. Segment reporting enables consumer of financial statements to have a better understanding of the swings that may impact the total figure for each segment. If a company's earnings are much greater than projected, segment reporting reveals where those profits are coming from. A stakeholder might examine the same report to see if the figures are sustainable. The third advantage is future plans of company could be well known by investors. With segment reporting, investors can get a clearer understanding of the fluctuations that could impact the overall figure. For instance, if a company reports so much higher than expected earnings, segment reporting shows where those earnings come from. The shareholder may look at the same report to decide if the number are sustainable. It is designed to help investors better understand the company and its future cash flow. Next, one of the disadvantages of segment reporting is data manipulation. If the information is provided in the true management-ized manner, segment reporting is utilized for data modification. This allows firm management more leeway in deciding how segments are built and what indicators are released. For example, managers would falsify and change company statistics in order to entice shareholders and investors to invest into their firms. Besides, the other disadvantages is emphasis on the present. Short-term numbers may be overemphasized in segment reporting. For example, a corporation may utilize short-term data to present their segments while ignoring long-term figures, although knowing that this might have a long-term impact on their organization.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Amshad bin Muhammad Afandi, and now we'll be talking on interim reporting of Alliance Bank. First of all, we'll be talking on basics of preparation of the interim report. Alliance Bank publish quarterly interim financial report. They prepare on periodic basis. Alliance Bank prepared its financial statement using Malaysian Financial Report Standard for the financial period ending 31st March 2021. The interim financial report is audited and prepared according to MFRS 134 and paragraph 9.22 Bursa Malaysia Securities Berhad listing requirement. Next is the accounting policy that Alliance Banks follow in prepare their interim report. Alliance Bank accounting policies consist of MFRS 3 definition of a business, which is an integrated set of activities and asset that is capable of being conducted and managed for the purpose of providing goods or services to customers, generating investment income such as dividends or interest, or generating other income from ordinary activities. Another policies that consists in Alliance Bank interim report is MFRS 101 presentation of financial statement, which is a comprehensive guide that covers various aspects of preparing and presenting general purpose financial statement. There are a few types of interim reports that are prepared by Alliance Bank. One of it is condensed statements of financial position, condensed statements of income, condensed statements of comprehensive income, condensed statement of changes in equity, condensed statement of cash flows, and last but not least, notes to the financial statement. And now I will pass to next speaker, Muhammad Isha.
Alliance Bank Malaysia Berhad accounting period is 12 months starting from 1st April 2020 until 31st March 2020. In accordance with MFRS 134 interim reporting, the current and comparative periods for each statement prepared by Alliance Bank Malaysia Berhad will be measured from 1st January 2021 to 31st March 2021, which is the fourth quarter of the company interim report. First, statement of financial position. The current period of this statement is 3 months as at 31st March 2020. The comparative period for the statement will be the immediately preceding financial year ended as at 31st March 2020. Second, the statement of income and comprehensive income will be compared for 3 months for the current period and 12 months for cumulative period. The current period of this statement, which is 3 months ending 31st March 2020, will be compared to 3 months ending 31st March 2020, while the cumulative year-to-date for 12 months ending 31st March 2020 will be compared to cumulative year-to-date for 12 months ending 31st March 2020. Third, both the statement of changes in equity and statement of cash flows 12 months ending at the year ended to date 31st March 2020 will be compared cumulatively with the immediately preceding financial year to date 12 months ending 31st March 2020. Next, there are two adjustments made by the Alliance Bank Malaysia Berhad for the financial year ended 31st March 2021. First, the company decided to adopt fair value method. On 31st March 2021, Alliance Bank Malaysia Berhad decided to adopt the fair value model for the building acquired at 10 million ringgit Malaysia, which will be increased to 10.5 million ringgit Malaysia. The amount of the building increased by 500,000 ringgit Malaysia will be capitalized under property, plant and equipment in statement of financial position for the year ended 31st March 2021. The gain in fair value will be written as revenue in statement of income for that quarter. Second, the company acquired new intangible assets. On 1st January 2021, Alliance Bank Malaysia Berhad acquired new software at the cost of 1.6 million ringgit Malaysia, which is expected to be used for 10 years. The new software amounted to 1.6 million ringgit Malaysia will be capitalized in statement of financial position under intangible assets. The software will be amortized 40,000 ringgit Malaysia for the year ended 31st March 2021. This is the comparison of statement of financial position for the financial year ended 31st March 2021 between before and after adjustments. After the first adjustments, when company decide to adopt fair value method for its assets, the property, plant and equipment value increased from 55.93 billion ringgit Malaysia to 56.43 billion ringgit Malaysia by 500,000 ringgit Malaysia. Next, after adjustments too, when the company acquired new software, the value of intangible assets increased from 329 billion and 4,000 ringgit Malaysia to 330.564 billion ringgit Malaysia by 1.56 million ringgit Malaysia after deducting amortization cost amounted 40,000 ringgit Malaysia.